What's going on, penny boys and gals? What's going on, stock traders? And welcome to our charting live. We do this every week, Thursday, 5 p.m. Eastern. We have a special start time, start day, start week today. We're doing Wednesday, 5 p.m. Eastern. I know, Jay, you are currently visiting family. I know everyone's still coming back from the holidays. So all y'all listening, happy holidays, happy New Year. Hope that everyone enjoyed, was safe, and has had a good one. But let's get right into the stream. This is our charting live. Once again, we do this every Thursday, 5 p.m. Eastern. And we go over all the trades that we talk about in the blog. We're going to be doing some updates, as well as answering any questions for people who are live here in the Discord chat regarding our 8-week charting 101 course gone over by Duco says slips to George Washington's. The charting 101 course gone over with myself and BTCJ. I was hosting it. Jay was teaching it. So if anyone has any questions on any of those classes, feel free to tune in Thursday, 5 p.m. Eastern. Ask them here, or if you do follow along with the trades, I know we already hit 13% trade on, I believe it was Prop C, another one on Near. We got to around 10%. I know we're up currently on Google, McDonald's, and TKO. We're not down on anything currently, which is the one thing I noticed about this strategy, Jay, is once it hits your very, very, very particular entry criteria, and of course, we're not forcing trades here. There's a lot of these trades who aren't even close to entry, and it's just letting the trade come to you, having that high conviction based off of a strategy. And we are going to be going over all of it right now, just updating it. And let's just get right into it. I see you have a ticker on the screen. I was going to ask you about McDonald's. I know that was the first one that we actually ever did. Now, McDonald's is currently, and I have it here on my watch list, is currently trading at $294 and 1 penny. So $294 and a cent. We entered this. We had the alert, certainly not like alert, I guess, the trade idea posted on the blog on December 8th. We did hit entry. I did post it about that on both my Twitter and in that Charting 101 Trades channel. We hit entry. I believe it was either 12:11. I think it was 12:11 we hit entry. And our entry for this one was $287.60 with targets of $293. And then another target at $300 stop loss of $283. Once again, this is McDonald's. MCD. So we actually went up to target 1. And that was right before the Fed meeting, which is we advise, if you are holding anything, even this trade, might be a good idea to take profit for up. And then, of course, the Fed meeting happened. That was, I think it was like 12/13 or whatever, last month. Went back down 2 entries. So those who didn't get in on the first time got an extra chance to get in. And now we blasted through target 1 at 293. Currently trading at 294, I believe is at all-time highs levels right now. For McDonald's. What do you see for this one? Any trade update? I know we're nearing our second target here at 300. What do you think about this one?
So indeed, McDonald's, last year we had a couple of down months, and back then I wasn't really paying that much attention to it. But then towards the later end of the year, especially in November and in December, we put in 2 bullish candlesticks again. And just it's the same thing as what we've also started with in the course, right? We zoom out, we go to a high time frame, and on the monthly time frame, it's pretty obvious that in the bigger picture, all the dips get bought up, and you're just making higher highs and basically creating all-time highs very regularly. So I think it's very likely here for McDonald's that we are on our way to keep doing just that, which means just keep on breaking the resistance and making higher highs, right? So from here, and this is something that I really want to reiterate, like for every single ticker, for everything, you go to a high time frame, like a monthly, and you will be able to see, okay, where is that monthly open coming in? So if I'm just going to McDonald's here, right, and I'm hovering over the current monthly candlestick, the only indicator that I'm really using is what is on the top left of my screen right there. So the open price is 295.05. That is the opening here on TradingView of the month of January. So that is immediately a very important level that we can derive from the higher timeframes, which is the yearly open, the monthly open, the weekly open, all lining up this year. As January 1st was a Monday, we have all those high time frame open levels coming in at the same level. So that is going to be important. And if you're not involved in McDonald's yet, again, indeed, our previous trade idea did extremely well. We got in well below 290 there, and we we've went pretty much to 298. From here, if you're not involved, I would be just looking at the monthly time frame and the monthly open, and I would like to see that flip back into support on lower time frames to basically go long. Because if we're just zooming into this, right, and every candlestick here represents essentially 1 month of trading. So the all-time high that at least I see for McDonald's was put in last year in July at 299.35, right? So I can just make a simple line there. You could call that resistance, the all-time high, whatever, right? So the moment that we get above the monthly open here today, this month or whatever, 295.05, I think it's very likely that we're going to at least take out that high and then potentially go higher. So for McDonald's, I see no reason to fade this uptrend, right? And essentially, and this is also, of course, from the charting masterclass, when I see this, right, we have an all-time high there at 299.35. That's a swing high. From there, we get sold off, and we create this bottom here in October of 2023. So this gives us a sort of like a range, right? We have an all-time high right here, and then we got sold off all the way down to 245.73 before going back up here. So my assumption is that McDonald's is likely on its way to make new all-time highs. And this swing that we had down here, so from swing high in July to swing low in October, that downswing gives us projections to the upside where McDonald's is now likely going to trade to. So taking a Fibonacci level, right, from that high to this low. And again, we've went over that in the charting masterclasses as well. Just using a simple 1272 and a 1618 Fibonacci level here, I can add in the 0 and the 1 Fib to make it very clear that the 1 Fib comes first in time. And after we have the sell-off, right, the 0 Fib is the thing that comes later in time. So my bias is very simple. I think we're going to hit 299.35, and that if that level flips into support, that it's very likely going to hit 315.86 and then potentially all the way up to 338.19. So my idea is higher highs, higher lows. In case this retraces, right, what you would want to look at is the high, not from last month, but from the month prior. So in November, right, this monthly candlestick opens here, makes a high at 283.9. Well, that high, that would be something that if we come down and markets start selling off, and say, for example, we don't get above the monthly open here again at 295.05 and market just comes down, it's not because I have a bullish bias that every single dollar here is a good buy, right? So I think focusing on these high time frame levels is super important, and that gives you a level at 283.9. So then basically adding a couple of things together, right? What have we really done? We've gone to a monthly time frame. We have established our bias based on previous price action. We've established where our monthly open is. And what we can do is, of course, mark out that monthly open level and put an alert on that line. So add alert on trend line, which is this horizontal line, the monthly open, right? Condition, we want to know when price gets above that level, basically for continuation to that high that was made in July 2023, and then to our target at 315 and then 338. But if we come down, right, we're looking at the high from November 2023. So that is also a level, a high time frame level, where you would like to set an alert, not condition crossing up, but condition crossing down, because that is a level that could very well turn into support if we do come down. So that's really the levels that I need from the monthly, and then you can just look at it here on the weekly.
Really quick, can you just repeat those levels again for McDonald's?
Yeah.
You said 330, there's 2 bullish and then 1 support one.
Yeah, so if we can get above 295.05, which is the yearly open, then I think we're at least going to run to 299.35. But at that point, I expect that we're going to run above 300 and that the next big target for McDonald's is 315.86. And that's based on Fibonacci levels, right? So Fib from this high to this low projects a 1272 here to the upside. That's 315.86. And the next level of resistance based on the high time frame here is 338.19. And this is something that you cannot know because you have no prior price action there. So there's no way to look at the left here and to determine, okay, where is McDonald's likely going to hit resistance? But if you know how to take these fib levels, this is a good way to basically determine where this is likely going to go to. And then for support, Duck, we're looking at 283.9, which is the monthly high from November 2023. And that it would be ideal, and you don't need to remember this terminology. But if in this month price would get back to 283.9 and hold there, that would be called an immediate rebalance. Coming back to the high from 2 months ago to flip it into support would be ideal. So that is a level that you would want to look for long positions. Again, price gets below the level, closes a 4-hour back above it, that would be a good long trigger. And for short positions, I'm just not interested here for the reasons mentioned. We're trading in a bull market for McDonald's, and short positions, you only really want to bother with short positions once we go higher and break into new all-time highs, and once you see confirmed resistance at one of my fib levels. So a move above 315.86, 4-hour candle close back below, something like that here, or if it runs higher above the 338.19 and then a 4-hour candle close back below, those are good shorting opportunities, because then you've really hit very important high time frame targets where smart money is going to take their profits, and it's likely going to retrace back from those levels back down. So that's really it to focus on. Does price have to hold at 283.9? Doesn't have to do that. But by the time that we get there, we will be able to make updated levels. For now, I think those are really the most important ones to look at.
Awesome. That's perfect. And I personally was taking notes because I know I'll be updating that once we get to those levels. I know right now for the people who entered with us, we're still up on that trade. So no need to do anything crazy there. But, if you haven't, then, of course, you have these other trade ideas, the trade levels as well.
Yeah, you do such a good job at making it very clear to everybody where the entry is. Yeah, you're really hand holding, and you're really saying yeah, guys, we're getting a second entry chance and so on. So while I'm here, my goal is mainly to give like updates about it and what I see from here. So resistance here, and then a support level here. That is the main thing to focus on. Again, I don't know what your guys' goal is for 2024, but for me, it really is to wait until I get into positions of power. I have zero interest to day trade the equity market in the United States, absolutely none whatsoever. So if you guys want to do that and play options, that is fine. I am absolutely not even going to think about doing that.
Right. No, I know we're going over an options. Pookie and I are going to be going over an option strategy tomorrow, 5 p.m. Eastern. That actually goes over how to possibly find an options trade based off of these long-term swing plays that we put out in the blog. It's finding expiration. Oh, well, we'll go over that. That's Thursday, 5 p.m. Eastern. That's the start of our option 101 course. It's every Thursday, 2 p.m. Eastern. Ours is 5 p.m. Eastern. But let's get to the next stock here. So I know there's a great update at McDonald's. I want to get this, probably be a quicker one, because Macy's was the next one that we talked about. We actually haven't hit entry here. For Macy's, you were saying that you were looking at $21 as an entry for continuation play. We have yet to, even get close to $21, and the closest we got was around $20.50. So we haven't hit our continuation play entry. You also had an entry if we get a dip down at support of $16.50. But we once again have not hit that yet. We're currently trading at $18.94. So anything you want to update as far as this one goes? Currently just kind of waiting for it to hit one of your levels. Once again, we're not forcing trade here with this strategy. It's all about letting the trades come to us.
Exactly. So we can for sure take a look at Macy's, but again, if price is not going to come to my level, and if it's not going to do what I want to do, then, well, I don't know how many tickers exactly there are, but there's a lot. So you never need to feel like, oh, I have to now force this on this particular ticker, right? It's a very narrow-minded mindset if you think that any particular ticker or play is going to make you. I mean, if you're going to trade for a long time, you will you will get your chances. So, but for Macy's, I mean, it's something that looks way worse than McDonald's, for example. So if you look at it in the bigger picture, right, McDonald's is literally something that on the monthly time frame is always making higher highs, where the dips are constantly being bought up, and where, well, new all-time highs are basically in the program every single year. For Macy's, that's a little bit different, right? If you look at this on the monthly time frame, it's a bit more complex than just a bull market that keeps on making new all-time highs time and time again. This actually, you could make a very good case here for Macy's that we're actually still in a bear market or in a downtrend, right? With a high up there, then a low here, a lower high. This is a lower low. All this move up, this right here is still a lower high in comparison to this high. And then essentially now we're hanging in here. I'm not so very convinced on the monthly time frame that there's an easy trade to take here. So I would just practice patience with this. It's very simple. You look at the weekly time frame, we're literally hanging here on a gap. So this right here, this is not a fair value gap, because a fair value gap, for those that remembered, for example, a fair value gap would be, is always a 3 candlestick pattern, right? So you have one candlestick, a bigger one, and then a third one. This right here, this would be a fair value gap. This right here is not a fair value gap. It's a volume imbalance. This weekly candle closes here, and this weekly candle the next week after, it opens basically here. So the distance here, that's a gap. It could very easily, in my opinion, at the very, very least, trade back down to where this weekly candlestick has closed to essentially fill that volume imbalance. But if we get below that, right, this is not the level that I've suggested taking a long position on. I would indeed like to see it tap into this fair value gap, get back above it, and then go. I'm not, like, if I'm looking at McDonald's, it's really very simple for McDonald's. For Macy's, it's not really that simple. So I would wait until at the very least, this gap here gets filled. And at that point, I mean, the reason why these fair value gaps work so well, right, is because it's literally an inefficient move. So price jumps through this price area quickly, leaves a lot of orders essentially between 15.12 and 16.35 unfilled. So this red box, you got to see it as a whole pool of unfilled orders, and basically an inefficiency to the market, that it's very likely that at some point this year we're going to come back and trade into this. So if you know these levels, for example, based on this weekly fair value gap, those are excellent levels to look, for example, for a long position, with the exact strategy that you want to see a move below the level and then a 4-hour candle close back above it before you go long. Like, realistically, if I'm looking at this, it is something that I'm never ever going to say, yeah, guys, just long here now, because this looks like a high, a lower high, and another lower high here. And this looks like a low and a lower low. So I've kind of made fun also in the charting masterclass of people that are going to do something like this and that are going to call that a falling wedge bullish pattern, because all these patterns, like, it diverts attention away from the fact that this is a downtrend. So like something like this here, where I see this trend line and this trend line gets broken and people are looking here for a retest off of that trend line, it's likely not going to work, because this gap below us, that is pulling price back to it. So these trend lines, they have no value to me. I would keep it very simple. We're currently in a downtrend on the monthly time frame and on the weekly time frame. So you definitely don't want to be early. And just looking at this and kind of reassessing, right? 16.35 is a good level to look for a long position, and 15.12 is also a good level to look for a long position. If those two levels fail, then you're going to look at the open price of this weekly candlestick at $13. So very simple. I would say the update is 16.35, 15.12, and $13 are decent levels to look for a long position, but only if price gets below and then can close a 4-hour candlestick back above. I would not trade it up here. I'm simply not interested, right? I'm going to be very honest with you. If I don't like something, you could add Stocks Buddy in here and see what it says. It had a bull signal from close to the bottom. But yeah, here it's not giving anything. It's also not giving you a bear signal or anything. I would just wait, hold off, and see this fair value gap filled. And if you get an entry from there, right, the risk reward is so much better, because this can for sure run back to these highs here. So for example, a good target would be there at 25.12 here, the swing high here. And it's very possible that we reach it this year, but it's not optimal to just buy here and hope that you're going to hit that, because during the drawdown, right, people end up selling for a loss. So I would rather just wait here and see if we can put in a higher low here in comparison to this low here. It's a more difficult chart, I would say, than McDonald's. And to keep it simple, this is literally what you want to focus on. 1, 2, 3 levels on the weekly time frame right here.
Perfect. And yeah, that's actually exactly what, the same technical analysis that you gave, the same exact chart earlier when we made that blog post. So it seems like we're still looking at the same levels and just waiting for, just waiting for the trade to come, not forcing anything, not throwing out a bunch of indicators, and hoping or praying that you can find some random trade that will make it work out. It's just, like you said, we have a bunch of different stocks. I think it's like over 15 stocks right now on the watch list. So like, there's always going to be another trade out there. So definitely not no need to force it if it doesn't hit your high conviction levels.
Bro, and there's honestly, I'm looking at things like even today, and this could be like an intermezzo. Like I'm looking at stocks that I'm like, this is like really of interest to me. But if it's not really of interest to me, I'll set alerts and wait until it hits. To be honest, Macy's is something that I'm probably not even going to play myself. I'm just not that interested. The only reason why I've provided analysis on Macy's is because you asked me to, because there was something happening with that company or whatever. But
they had their
probably
big $5.8 billion takeover offer that they said no to.
And is this something that has dividends? Probably does, right?
Most likely. I know Costco is the one that we were playing that was a big dividend one. But I'm going to skip right over Costco for now, because I wanted to go over TKO with you. This is one that you've been talking about a lot, both on Twitter and in the Analyst Idea channel. We talked about this one. TKO, for those who don't know, is the parent company of the now merged WWE and UFC.
Yeah.
So you were looking at an entry at $78.87. Currently, we're trading at $79.38. We did hit entry. We actually hit entry once since the trade call out, and then we had a little dip back below entry for a second entry, which we updated, and then it went up as high as $82. Now it's currently down a little bit, trading at $79.50. Still up from our entry though.
Yeah.
Slower trade, which is perfectly fine. I prefer these slower trades than trying to keep track of 45 different updates every day. But so what do you want to say about TKO for those of us who are still in it?
Like we've went now over McDonald's first, and then we've looked at Macy's, and now TKO. So McDonald's, when we were looking at that on the monthly time frame, we immediately said, like, yeah, this is something that is always making all-time highs, where like the market structure is insanely bullish. Then we've looked at Macy's, and we've basically said, well, this is in a monthly and a weekly downtrend. If I'm looking at TKO, this is something that it's not as crazy as McDonald's, but it's also something that it's made a new all-time high last year. So that in and of itself, that's interesting, right? So if we zoom in here on the monthly candlesticks, we've had a prior all-time high in 2019. Then we've got sold off all the way here in the COVID candle, essentially the March 2020 candle, right? And then we've made a new all-time high. Plenty of charts since 2021, right? Since 2021, a lot of charts have essentially been sold back down, even to the COVID lows, right? But TKO is something that has made a new all-time high and is holding pretty well here. So if I'm just looking at the market structure here on the monthly time frame, we have a new all-time high made last year. And what are we really doing here? I was looking at the weekly time frame, right? So on the weekly time frame, those are your prior all-time highs, sell-off to the COVID low, and then essentially a very nice trend to new all-time high. And from that new all-time high, we did get sold off a little bit. But a couple of weeks ago, so 4 4 weeks ago, right, in December, the first weekly candle of December, we had a down close candlestick right here. So open price 78.23, closing price 73.77. This candlestick right here is essentially the most important one that I was looking at. And if you guys hear a lot of rain in the background, I apologize. That's possible. But this weekly candlestick right here, right? So the first one in December with the open price at 78.23 and the closing price at 73.77, right? This area, so I'm taking a rectangle from the open to the closing price of that exact weekly candlestick, right? The bigger picture is still that we're uptrending on the monthly time frame, that we've made a new all-time high last year. And I've come to this chart after we had a serious already correction, right? My assumption is very simple, is that this red candlestick is a bullish order block. Why? Because if you look at the open price of this candlestick, right, the most important indicator is what is in the top left here, open, close, and the highs of the candlestick. So 78.23, that is an important level. That is the open price of this last weekly down close candle, right? Then 2 weeks after we've put in that down close candle, what have we done? We've traded back above the open price of that down close candle, and we've closed back above it. That validates this down close candle to be a bullish order block. If you need more information as to why that is, I would honestly say you should look at the ICT videos on YouTube or look that up, right? For now, just bear in mind that it's important that we've broke above 78.23. So this essentially gives a very easy swing trade, right? My thesis is wrong if we get below the low of this weekly candlestick. That's like, my assumption is that we're not going to get below 72.33 before running higher. All right, so that gives an easy invalidation here. Stop loss below this bullish order block. I'm just going to trail it up here to that wick. If we get below that, the market structure is bearish, and we're very likely going to continue to, at the very least, the low here, which is 67.3. But in reality, this could go way, way lower. So it's very important that we stop out there. But if I'm right, and if this red candlestick is a bullish order block, then essentially we can expect upside before losing the low of that weekly candlestick. And a first easy target would be the high from this first weekly candle in November, right? So if we're not going to go below this order block, we're going to run to the upside. That's why 87.67 is my first swing target. But if we can get above that, I think we're likely going to run back to the low of this weekly candlestick here, right? So if I mark this out, this is a bearish weekly fair value gap. If we can get above this level, I think this gap will fill, and the second target for my swing is 98.07. So I'm playing long in conjunction with the bigger overarching monthly uptrend, but I don't even need this thing to make all-time highs again for me to be right and to be profitable on a position. I've took this on the demo account on TradingView, but this is also something that I've took the exact same position in my own trading account. There's a couple of these things that I'm playing myself, and TKO is one of them.
Nice.
So that is essentially it. So I cannot guarantee you that it's going to move up from here, but I can guarantee you that it's a good idea to stop out if you get back below this red candlestick. At that point, it likely goes lower, and we'll reassess if and when that happens. But for now, I'm in this and sticking with it.
Awesome. And that was once again TKO, one that we are currently up on. Another one that we're currently up on before I want to get to Planet Fitness is I want to talk about Google. Because right now our current open plays is McDonald's, Google, and TKO. But Google, you had an entry at, I believe it was a break above 135, which we got a little while ago. So we've just kind of been in this play, just kind of riding it. It's been just steadily going up. Had a little bit of a drop since hitting that 142 level, I believe. Maybe that was like around 1226, like right after Christmas. But once again, targets 150, looking for a stop loss below 124.50. What are we looking at for Google right now?
Well, and exactly also when you're asking me about analysis, right? after I give you the analysis, things can change, right? So the first thing again that I want to do, just as with all the other tickers, is to provide the monthly outlook. So apart from McDonald's, this is by far the cleanest uptrend that I've seen out of all the tickers that we have went over. It's very similar to McDonald's, and essentially I have seen a lot of charts last year, and I'm thinking on top of my head about Nvidia that's broken the previous all-time high and made new all-time high. I'm also thinking about, of course, SPY and the Qs itself, who've also made new all-time highs. I'm thinking about Meta, which is also like on an absolute tear. Google, so the Google class A here, has an all-time high at 151.55, right? And it's the exact same setup as all these other blue chip tickers, with the difference that this one has not hit that all-time high again. So if I were to compare two charts here, right? Nvidia has already broken the all-time high and is already trading up higher. I think that the chance is very high that Google simply is going to do the same thing. Therefore, that 151.55 level, the previous all-time high, is a level that I think we're heading to. And if that breaks, I think we're heading to the same exact fips that Nvidia was moving to. The 1272 for Google is 178.31, and then the 1618. So the 1272 is 178.31, and the 1618 is 219.3. So just a monthly time frame, I have a very bullish perspective, and my idea is that we're on our way to 151.55. But of course, we're not going to do that in a straight line, are we? We're always going to move up and down as we go. Now, what I see for Google, right, on the weekly, just moving in, that's the previous all-time high, huge sell-off into 2022, and now we're all the way back here. It's very possible that we're not going to hit that all-time high, but I think the chances are that we are. Other charts have done it as well. And I personally think that if you're looking at all of these candlesticks here recently, right, on the weekly time frame, if we're looking at these weekly candlesticks, the most important one that I see here is essentially this big red one, where we have a 9.9% sell-off just in 1 week. That's obviously a lot, right? We got sold off. This candle has a high at 139.36 and got sold off all the way to 120.21, right? What I want to do there is the same thing as with that TKO weekly candle, that red weekly candle, right? I want to mark off the open price of that weekly candle, because the moment that we have traded back above the open price here, and especially traded back above it, what is that open price? That is 135.04. What was the trade setup? Was a break above 135. That is what I was looking at, this big weekly candlestick, the open price of that big weekly candlestick, and the fact that 1, 2, 3 weeks later, I've essentially got the confirmation that this red candlestick is a bullish order block by trading back above the open price and closing there. We had a couple of weeks of just some sideways and a little bit of down, but we've never, ever threatened to basically fill this red candlestick again. At any point when Google is going to get below the low of this exact weekly candlestick, you know that it is truly bearish and that it is likely going to continue further down, that it is likely going to fill this fair value gap. So if it gets below 120.21, it's likely going below 110. 107.99 would be a level, the bottom end of this weekly fair value gap. However, right, we're trading above the open price of this red candlestick. I think this is a huge bullish order block, and we're now trading above it. I expect this, and my bias is that we're going to hit this 151.55 before we get back below the low of this candlestick. So the trade setup which we've shared, which we've suggested, was waiting for a break above 135.04, and with that wide stop loss. All these weeks later, we've traded well above 135. At this point, we've hit a high at 142.68. At this point, right, as price action develops, you would also trail up your stop loss. So while initially you're looking for a bigger move up and then a stop loss below the low of that red candlestick, at this point, right, if you're in Google and if you're in the same play, and if you got in on the break of 135, it now no longer makes sense, in my opinion, to let that run below, I would say, the low of this green candlestick. So if we get back below, let's say 132, that would spell trouble, and at least we could maybe go lower. At that point, I wouldn't hold on to it, but I would also not flip bearish yet. Flipping bearish on this thing only when we get below 120.21, and that flips into resistance. That would be bearish confirmation. But I'm also not going to hold it if it comes down and gets back below 132. For now, I think it's perfectly fine. It's solid. We've traded above the open price of that bullish order block. We're still maintaining there. And I mean, 142.68 is a very clean local high. If we're going to get above that exact level there, flip that into support, I think that 151.55 is the bigger magnet to the market. That previous all-time high, also basically the level that all of these other blue chip stocks have ended up hitting. So that's kind of the idea on Google. The most important aspect of everything there was essentially this big weekly down close candle. The open price of that, right, 135, the moment we got above 135, that was the go sign to go long. Because we're also, of course, first looking at the larger picture and the larger time frames, and that just points us to that all-time high.
I appreciate you going over this with such detail. For us now, now for us who are in the trade, or maybe just watching it for now, looking to get into the next trade that hits entry. This is nice, seeing why you're putting your stops where you are, why you're, how you're looking at the, the weekly order blocks, the candle lows and all that, and, to determine, whether or not we actually why you would be, in theory, staying in a trade or getting out of it. So a lot of times it's easy just to say, oh, here's an entry, and then wait for it to eventually hit target, but it could have hit stop loss like 7 times since then. So it's nice knowing this is exactly what we're looking for. So I do appreciate you breaking it down that way.
Perfect. And before we go to the next one, I just quickly wanna have Google here to the left and TKO to the right, and basically point your attention to this big red candlestick here on the weekly, and this red candlestick also on the weekly. If you've looked, I've essentially done the same thing on both things, right? I've seen this order block, I've seen this red candlestick, I've marked out the open price. I've also marked out the open price here, because that was also my trigger to go long on TKO, was getting above the open price here, 78.23. The moment we get above the open price of that big red candlestick, that to me was my long trigger with a stop loss below the low of that red candlestick. But as price moves up, and also same thing with TKO here, if this position would start moving in our favor, then we can of course think about trailing that stop loss up and higher as the trade progresses, right? As I'm getting into a trade, I'm giving it room to under the big red candlestick. But of course, if the trade moves, and especially moves in our favor, at that point we will trail our stop loss up higher and go from there. But the idea of this red candlestick is exactly the same. The thesis is exactly the same, is that by trading above the open price here and above the open price here, this validates as a bullish order block. But yeah, that's it. We can go to the next one if you want.
Let's do one more, then we'll do a little giveaway after this.
Awesome.
And I did promise everyone a giveaway during this time block, so I definitely want to make sure that we make good on that before I forget. But let's go to, and I'll post the link to the trade idea for this one. We're going over PLNT Fitness. This was one of our more recent ones. You had a few different trade ideas for this one. I'm not going to go ahead and read all of them because there's like 4 different options, but I would love to just get your analysis on this one. I know currently we are trading for PLNT Fitness. I'm just going to look it up right here at $71. We did have a level at $72.90 for a short entry. We're waiting for the price to test $72.90, and then once it broke below that price and $72.90 flipped to a confirmed resistance, we were looking to enter target $67, $56 stop loss above 80. Is this something that we're currently is that entry maybe confirmed with this current retest, you think the past market, past
Let's take
day
a look
or
at
two
it, right?
market? Yeah, because I know the past day or two the market might have been a little bit different for us, certain bear
Yeah.
entries,
Yeah, and especially these first few days of the year, I would simply say take it very very easily. The markets are currently kind of wild, and just people that come to the market thinking that yeah, the first week here we're gonna do like very well, and then they immediately get disillusioned. Just keep it simple, right? The first thing we do for all these charts, right, is look at the monthly time frame and where we're at. So I've seen a couple of charts that are like really, really like very, very bullish, like McDonald's, like Google, TKO also putting in a new all-time high last year. Planet Fitness is something, it doesn't look as bad as that Macy's chart, but at the very least, right, we have that monthly high, a low, a lower high, a lower low, and this right here could be another lower high before coming down. If I'm looking at this, right, if I'm looking at this, it's not the same clear bullish market structure as what I've seen on, for example, Google or McDonald's. So when you asked me about this sticker, my first reaction was like, man, I don't want to go long that here, especially I had not looked at this sticker, right? And I see that we had 1, 2, 3 months of green in an overarching downtrend. So if you followed me for a while, right, you know that I'm always looking at these fair value gaps. For example, here on the monthly time frame, we have a bigger fair value gap from the high of this month to the low of that month. We haven't even traded into it just once. So my assumption is that this Planet Fitness stuff is at least going to trade back to 67.02, which is the low from last month. Doesn't need to do it from exactly here. Could also hit resistance up higher and then come back down. I just think that if you're like, oh, I'm going to buy this now, and this is going to be a long-term investment, that is absolutely, in my opinion, likely not going to work out very well. For long-term investments, I would be looking at these big monthly fair value gaps and the levels from there, and we haven't even traded into the top end of it yet. So that's something that I was looking at. That 72.9 level, right? I'm just looking at it here. I had this level of support, resistance, also the bottom end of this fair value gap. I mean, and I probably should even go to the after hours, because I see that after hours we're trading back at $73 here. Honestly, I had a little bit of struggles with this chart. The only thing that I was really looking at was this big monthly time frame fair value gap. Then on the weekly time frame, I'm not gonna lie, I just gave you some setups because you've asked me to for it. But I mean, from my reaction in the DMs as well, you've probably saw that like same thing as with Macy's. I'm completely uninterested, and I'm myself. I'm not gonna touch that. So that's 72.9. I mean, if we're gonna get above that tomorrow, I would say cut the short and just leave it behind. I wouldn't trade it, to be honest. It's like if I'm looking at Google or McDonald's, it's so clean and clear. But this Planet Fitness, just like with Macy's, it's kind of a choppy and sloppy chart, and I'm not really that much of a fan. So if you would say smash or pass, I would immediately say pass. So yeah, gave you the trade setups because you've asked, but this is something, man, I've even told you that I'm not gonna in a million years touch this. So that's kind of my my input on your Planet Express, dude. I mean, that 72.9 looked like a good resistance. If we're gonna get above it, just cut it for a minor loss and move on. That's really like the honesty, because you've indeed, like you say, Sentinel, like I'm if I'm not interested, I'm not even gonna really do, I guess, effort to look deeper, because I know that on these other charts, I got into really solid setups, like for TKO, for Google, to the point where, like, I'm sorry, but I'm that disinterested in this chart that just skip it, man. Just skip it.
So this was like if someone's looking to enter, maybe has their own thesis along with that goes along with your bearish entry. But I didn't. It doesn't look like a very strong.
It's so side. It's also so sideways. Like from February 2020, like some of these charts, they've got a clear market structure, right? And they have clearly made a new all-time high and then make higher low and then another higher high, and it's like very clean. This right here is extremely choppy. There's already something that got sold off from $88 all the way down to 23.77 in just a couple of weeks. So in just a couple of weeks, and we've not even really been able to break out of this bigger range in all of this time. And locally, right, if I'm just looking at this locally, that's a high, this is a low, that's a lower high, this is a lower low. Anything here, I expect resistance and then coming back down. So if you're going long here, looking for a couple of dollars to the upside, where all of this here is still open to the downside, I mean, if you're really ask my opinion, I would say put a level right there. That's all I'm gonna do. If this year this thing can come down, get below my level, close a 4-hour above it, I'll punt along absolutely right there, but nothing else. That's really what I would want to see, to the point where this then becomes my low. That's a high. I want to see a higher low made here and then a higher high from exactly 56.94. And like exactly also what I've done with PayPal, right? Like in the past couple of months, I gave you guys a chart with one line for PayPal, and price hit below that line, closed a 4-hour back above it, never looked back, and gave you an insanely good risk reward trade. Knowing that I can do that and that I can come to those levels, it's really painful to have to give you long and short setups right in here, while I know like my actual interest myself, if I'm going to trade this, it is going to be from this level. After it gets below, then closes back above. But it's also like when I say to people, when you ask me like, oh, give me a trade setup, and we're currently trading at $73. And when I say, well, 56.94, right? That's my level. That's where I want to get to. People tune off. They turn off because they see, oh yeah, that's very far from where we're currently trading. That means he's not immediately giving me a trade setup. Therefore, like I'm tuning off. So that's also why I'm kind of hesitant to share these levels. But you can full well know that I have like conviction that that level is very plausible to come into play, that I would not play anything else. And that's really like the full story about Planet Fitness. And that's the only thing that kind of like it's I understand it. People want trade setups for every day, and they're not really very interested in a level long out, like far out, $20 from where we're at now. But if you just like if the only thing you do for Planet PLNT here this year is you keep it super simple. You set one line, you set one alert crossing down, you absolutely just get to another chart. And at some point this year, if that level is going to get hit, that is where you're not going to be bearish. That's where you're going to be looking for a long position on a 4-hour candle close back above that level. If that works out, that gives you an insanely good risk reward to go long. If that doesn't work out, we stop out, and that's probably going to be the last time I've played this chart. But from here, man, this is not where you want to be doing your business in the 70s. Neither short nor long, because if you're short, you might still be early. They might squeeze it into this here. This is a bearish order block, so they might squeeze it into that, then reject it. But for longs as well, I mean, your upside is, in my opinion, pretty limited. I think that this chart can only go way higher after it has filled this inefficiency here, this fair value gap. It has to take liquidity from here to get the power to go way higher. I don't think that this chart is looking like it has the power to go way higher to just turn the corner here and to run up. It's always possible, but I would be very surprised to see that this, especially this fair value gap here, would be left untouched, and this goes to make new all-time highs. I mean, kudos to the market maker if that happens, but I don't think that's going to happen.
No, I mean, going off of what you said earlier about, just if the trade isn't there, just don't take it, or a lot of your trade ideas do have prices that are, probably not going to be hit for in a week, maybe even a month or so. And like you said, a lot of people, they want it now. But if you are following along with these charting 101 trades, just be aware that you might have, like right now, I have 15 tickers on the watch list I'm watching, and every morning I go and I just look at every single one. I have my alert set for above and below, and the majority of them I don't even, I can just look at once. I don't have to look for the rest of the day because I know it's not going to hit entry. And so even though I have 15 tickers on, I'm really only actively tracking. In the morning, I look at all of them, and then I just am actively tracking. In this case, probably 3, maybe 4. 3 of which have just been up in the green since entry, since they hit entry. Very easy to track when you're just in the green the whole time. Playing these long-term swing plays. So like for those of you who are looking to do day trades and stuff, where you're not going to be you're definitely not going to be finding them in this channel. However, if you're looking for longer-term swing plays, looking to have the trades come to you, have your levels set, like you said, Jay. Trading isn't pressing the buttons; it's getting it set up, before any of that even happens. And that's kind of what we're doing here, with all these different tickers, McDonald's, TKO, Google. We're setting up these possible trades. I know with Planet Fitness in particular, we did have that one trade at the 72.50 area, but like the ones that you were actually more adamant about was the one down at the $56 area here in the trade idea. So a lot of people who trade like you do, they wouldn't even bother taking that the possible short entry on a not very great confirmation during a big red day, right in the beginning of they would wait for $67 or $56 a hit and then just take that longer entry. Yeah, it might be in a week or 2 or 3 weeks out, but it's going to be higher conviction, which means possibility for it to actually hit your target, as opposed more of a chance for it to hit your target than it is for those lower conviction plays. Do anything you just want to say there, Jay?
No, I was only gonna say, like, there's so many different things in the whole market that you don't need to be too married to just, I have to find a setup on exactly this or this. I did want to share this. This is something that I've actually personally gotten in this a few weeks ago, but I took a little bit more of a position on it today as well. This sticker is PBR.A. It's not PBR, it's PBR.A. And it's a stock traded on the New York Stock Exchange, so you're all able to trade that. And it's just something that has come to my attention because I was looking at the dollar, and the dollar is looking rather bullish here in the short term, might even be bullish in the mid to long term. And in that sense, a lot of these energy stocks, they tend to do well with the dollar. They tend to be good hedges to market downside. And one thing that I was looking at here is this the sticker has essentially trading at a level now that it has not seen since 2014. So that is 10 years ago that we've traded this at this exact price. I think this is looking for a breakout, and I think this is looking to go higher. So back in 2014 here, and this is a very important level. Essentially this level of support that turns resistance here, and now we're looking to get back above it again. So this is something that is on my radar. This has got
Jay, I think you're muted in Discord.
Oh man.
Oh, I know hear him. I thought you even know I hear him, Duco. I know.
I am so sorry. I'm so sorry, guys. Like this whole I guess this is just getting a little bit late, and I'll actually look to cover it tomorrow.
Actually, I was going to say we should end the stream portion and go just into Discord only, especially just with the echo thing.
I agreed.
That's so funny. Like, I asked if you're muted, and Duco says, "I know hear him," and I totally misread. I read it as like, "Oh no, I hear him."
I put myself on mute because you had an echo, and I feel like it's better if I put myself on mute. But then, of course, I have to understand that I have to unmute if I want to talk.
I know. It's the rubber. So you have to make sure you're muted in StreamYard, and I hear you 100%. No, you're talking about the energy. That's why I posted that trading. They must have been like, why is he posting a class about
So what I was saying, I'll quickly say it here again. I don't like I was looking at some energy stocks and at the dollar, because dollar going up typically also aligns with energy stocks doing well, and with the market having a little bit of a cool down, right? And I was looking at this this sticker here, PBR.A. We have not so we're currently trading at $15.82 after market, after hours. We're at 15.9 here. We have not traded this high since 2014. I'm not a big patterns guy, but I do know this is a low, that's a high, this is another higher low, another higher low. If you're a pattern guy, you can draw here this ascending triangle, right? It's not really perfect, but I think this is looking for a breakout, and I think this is likely going to continue in the 20s. That's something that I took positions on. So target to 22.14. I very much like low, higher low, and another higher low. And I've shared with you guys like what candlestick exactly I was looking at on TKO and on Google, right? What candlesticks are like really, really of like structural importance to me. Well, on this sticker, this red candlestick is what is the most important to me out of everything here now. This huge down close candle, right? In 1 month, that thing got sold off 52%. The same thing as what I've done with TKO, the same thing as what I've done with Google. You mark out the open price. So, and the open price is 11.44. That to me becomes a very important level that at this point I don't want to see us get back below 11.44 anymore. But the fact that we've gotten back above the open price of this huge nuke, which in context was already a higher low comparing to here, suggests to me that this resistance is likely going to get smashed. And I think this is going to happen probably in like this week. There's a lot of like built up compression here, flat resistance, higher lows. To me, that's just a bullish setup, which is so much cleaner than those things on Macy's or that other one, Planet Fitness. That you need to do some work and you need to look at different tickers and not just say, oh, I have to find something on this one, because there's things that are looking way better than, for example, Planet Fitness. And that's just the last thing that I wanted to say. PBR.A making highs like we haven't traded this high in over a decade. So this looks good to me. And this is also a dividend stock. So for my dividend lovers, for the bookies would love to hear this. I believe they don't shoot me, but I think they have around a $0.50 dividend a share, and they're I have to search that again. But I mean, it's pretty decent. The stock itself isn't even $16, but I do have to recheck that. But yeah, this is what I like. I want to, even if this comes down here, I will buy more on a dip and a higher low again. I just do not ever want to see this thing get back below 11.44. At that point, we could be looking at a huge cascade back down, and then you need to be the first one to get out of your position and not hold this down to these lows here. But yeah, that's pretty much everything, dude. Thanks for the platform you're offering here, Duck.
What? This is your platform too, Jay.
Man, you're the host. You're the host.
No, I appreciate you letting me be involved with this, and I know it's fun tracking your trade. Honestly, I've become a much better trader just being here, and during not just especially the 8-week course, but just even these in general. I'm like so looking forward to, like, by the end of 2024. I feel like I'm gonna have like a much better grasp of this particular strategy when it comes to technical
100%.
analysis. But let's go ahead and end this.
Duck just got rugged on StreamYard, it seems.
Yeah, no, hold on. I think, can you hear me now?
I can hear you again, Duck. Yeah.
Okay, sorry. I said my mic unplugged. That was. Anyway, let's go ahead and go over to the Discord. I'm just checking my mic now in the Discord to make sure it reconnected, and we'll do that giveaway and
Awesome.
And finish up the stream.
Awesome, dude. I'm gonna go on mute and stop sharing my screen. I hope it was somewhat helpful to you guys. Thanks for jumping in, everybody.
Yeah, we appreciate everyone for tuning in. We're going to be, once again, don't leave. For those of you who are live in Discord, we still are live giveaway coming up. For those of you watching on YouTube, thank you all for tuning in. We are going to be doing this every Thursday, 5 p.m. Eastern. We update all of the trades on the blog. We're going to have new trades coming out on the blog almost pretty much every single day, Monday through Friday. And we update all the trades with entries on my Twitter, as well as in that Charting 101 channel, which you can find for premium members in the Discord. I posted in the Discord, I posted a link to all the blog trade ideas. It's like in a little Google Sheets sheet that has all the different tickers, the link to the blog, which has the trade ideas, as well as just the topic of the blog. And I also posted in the Discord our Charting Master course, which has all 8 of those courses that Jay went over. Let's go ahead and get to the giveaway. Thank you all for tuning in on YouTube. Once again, we're going to be staying here live on Discord, but for those of you on YouTube, we hope that you all make some bread.